Good afternoon. This is Andy here from bullwaves.org, and I'm here with your weekly Elliott Wave update. Now, I'm going to start in the currencies. This is euro dollar. I hope you're all well, by the way. Um, we move into the end of the week. This is Friday, and another interesting week, I think. We finally got some moves to the downside on euro dollar, so let's get into those, and we'll see what lies ahead. Okay, you'll see off the top here. First of all, 4-hour chart. Um, I have long been looking for a C wave down to begin, so an ABC down. This is within the idea or within the context of a triangle, a developing triangle. So ABC, so 3 waves down in A, 3 waves up in B, and then wave C down should be a 5-wave affair, and that'll complete wave D of the triangle. So that's the 4-hour chart. You can see that we're starting to roll over off the top again. We came in to meet that previous B wave high, so we had the first A, B, C down, so this B wave high within wave A, and we have basically just bumped up against that for the last 10, 12 days, almost 2 weeks, just kind of bumped up along against that resistance, and it seems like we're beginning to roll over into wave C. Let's get into the hourly chart and we'll see what is brewing for us here. So far, like you can see here, we only have a 3-wave pattern down, and we did bounce today, but this can be viewed as a series of 1-2s, and you would expect if we're moving down into a pretty, what should be a kind of a extended, let's say, down or decline, we should kind of, let's say, lose momentum up to the upside and then begin to build momentum to the downside. So I'm not overly worried about the fact that it's only 3 waves down yet. I'm willing to give this a chance to build to the downside. It's a possibility that we have a 5, 3, 5, possible 3-wave pattern building here again in a second wave. So let's see how the rest of the day goes. The market in the US is open. The euro got a big bounce. Stocks got a bounce this morning. I think that was out of jobs data or something, some knee-jerk reaction to the jobs data. So we'll see how that flushes out for the rest of the day. We seem to be kind of have reached a high here this afternoon, so let's see if we trade off the highs this evening. That's kind of usually how that might plays out on a Friday anyway. So if this second wave comes in today, then we should see a third wave down begin next week, and that'll be a third of a third if this is correct. So let's move on. This is pound dollar. Looking at the possibility of a top here in pound dollar also. I haven't shown that in the 4-hour chart just yet, but last night we had a reasonable pattern off the high here. So I'll go into the hourly chart in a second and we'll elaborate on that. But there's a possibility, well, like let's say on the 4-hour chart, there's still the possibility that we have a 5-wave pattern up developing in wave 5 in green. But we did pip to a new high this week, and then we came down, well, in reasonably impulsive fashion. So we'll see how that moves on Monday. If we break above that 142 level again, or 142.36, it's coming in around 142.40. If we break above that again, that'll indicate that wave 5 of 5 is underway. But let's get into the hourly chart and we'll see what is brewing here. So you can see that we had wave 1 and 2 complete, and then 5 waves up in wave 3, possible combination wave 4, and then we pipped out to a new high above the wave 3 high, so that 142.20, and then we like 20 pips above the wave 3 high. So technically we could have a top in place for wave 5. The pattern of that has been 3 waves down. It depends on how you view it, but overtly it's 3 waves down so far. But this could be a wave 1 and an expanded flat wave 2, or a running flat wave 2. I don't know just yet. If that's the case, then we will roll over before 142.48 again, and or that's not the exact high. What's the exact high there? 142.50, let's call it. So if we roll off again this evening below 142.50, then that should indicate that we're into wave 1 down. So let's see how that goes today. Still a good few hours left in, well, the US market is only open for a few hours, so we'll see how that plays out. Here's dollar yen on the 4-hour chart. Now, the interesting thing we have developing here is the possibility of a 1-2 pattern. Now, I had yesterday's action was a little bit confusing because we spiked nicely higher, which suggested that we had a wave 1 of 3 already underway. But you see, today we've come down quite sharply off that new high. If I open that up a bit there, so I'm looking at a 1-2-1-2 pattern, and I'll show you that on the short-term chart. Now there is still the possibility that we have this alternate count here for wave 1 and 2 still underway, but we should know, I suppose, by early next week whether that's the case or not. I still favor this 1-2 pattern because the action has been pretty positive in dollar yen. In general, I mean, the upside has been, in general, the upside has been pretty brisk, and the downside has been pretty corrective. So it looks like we're still building higher lows into a third wave up. So here's the hourly chart. I was actually tracking this rally yesterday as the beginning of wave 1 up. We came up in 3 waves though, and then overnight we kind of traded lower, and then we blipped down just when the US opened there. Interestingly enough, I have no idea why they think jobs data came in a little bit slow, I think, under consensus. Maybe they think that's just going to yield more QE, but let's be honest, there's been nothing but QE everywhere across the globe for at least the last 10 years. So, if not more, you could probably call it since 2008. And that's 13 years. So there's been nothing but QE for 13 years. So and all that's managed to do is just blow a huge stock market bubble and an everything bubble, really. But in terms of the dollar, it hasn't killed the dollar. So, someone has to start looking at the debt instead of just, the accumulation of debt and interest. And that's a deflationary impulse right there. The more debt you have, the more interest you need to pay, the more deflation you're going to get. Just ask Japan. Okay, so we've got, I think, a pretty reasonable 5-wave pattern higher here in wave 1. And then most likely going to be an expanded flat ABC, wave 2, after today's sharp decline, or this morning's sharp decline. The only way that this pattern breaks is if we see a break of 108.55. And then I think we just move to that alternate bullish count on the 4-hour chart. So you can move back there and you can see that. Okay, so outlook is still for, we've got a nice bullish impulse wave building here, and I think we should push higher into a third wave next week. Okay, stock market, here we are. Still hanging below the lows. There's no sign of a major third wave decline just yet. We do have an impulsive 1-2 pattern off the high. We're still, what I meant to say was we're hanging below the highs. We have a 1-2 pattern. We have a right-hand shoulder built. We have a left-hand shoulder, we have a head, and we have a right-hand shoulder built. What we need is a decline. And a pretty sharp decline is what we need. So the early signs still favor a topping market here, even though we are quite close to that all-time high again. So we're nigh 400 points off the all-time high again. We'll see, whether that breaks or not. If it breaks, then we just have to move to another alternate count for wave 5 in blue here. Okay, so let's get into the hourly count here. You can see here that's the impulsive pattern that we have, a 1 and ABC up in 2. I think we have a 3-3-5 wave in in wave 2, so that gives us a flat correction wave 2, and then we did kind of spill lower, reasonably this week. It's yet to be decided whether this is in fact wave 1 and 2, so that would be again wave 1 down and an expanded flat wave 2. I cannot confirm or deny that. Excuse me, just yet. So, as far as I'm concerned, as long as we hold below that wave 2 low, that wave 2 lower high here, that comes in at 34.8, call it 840. So, call that 34.850. As long as we hold below that today, then we are on for wave 1 down. So, we're in a critical few days. I mentioned that last night in the update. We are moving again into a critical few days next week. If we spill down in 5 waves, then we're on for wave 3 down. So let's see how that goes. Okay, so here's gold. Gold spiked nicely higher today. Here we have the pattern in general in gold. This is the 4-hour chart. Actually, I should go to the daily chart to show you what I'm thinking here. I'm still looking at this 4th wave down. I remember, back in, early March, mid-March, I had an inkling that we might rally strongly, and I remember mentioning on the videos that if you were so inclined, it might be worth a punt. I still think that we are within an ABC pattern down. This just looks too it looks too good to be true here at the moment. Excuse me, at the moment. So I think we've got 3 waves down in A, a running flat wave B, and I think we'll get 5 waves down in wave C. And I think when we do get that new low in wave C down around 1650 or something, I think that could be the buy of the decade for gold. Okay, so let's get into the 4-hour chart there. You can see that we've got that A down, and A, B, C up in B, and then we should head lower pretty soon into wave C. I know I've been looking for that wave C for a while, but it's just been correction after correction after correction in the market. So, excuse me, I have a little bit of a cold. Possibility that we have wave 1 down done. I know it's pretty tight. It could also be wave 1 here and wave 2 here. Or we could be building a larger wave 1 in blue. Yet to be decided on that one. I'll stick with the count I had last night, and I'll work from there. It doesn't really alter just yet. The only thing that's happening right now actually is that we are breaking. We're just pipping up against that wave 1 low, so we'll probably have to change to that. We could easily do that right now. So if that's the case, then next week it's still looking lower. So in general, it doesn't really change anything. Just moving on the fly here. So here's my base of thinking here, that we have a B wave in and that we should head lower into a C wave. The alternate scenario is that we are topping in wave 1 and that we have a second wave decline coming. The main count allows for, let's say, a decline into about 1650. The alternate count calls for a decline into about 1750. So about $100 in the difference. I think once we start hitting around the 1700 level, it'll probably be time to start, calculating to the upside. Okay, but I think we could be onto a 1-2 pattern here, and we head lower into wave 3 next week. We'll see how that pans out on Monday. So let us move on. This week I changed in crude oil. Again, I had been looking at this as a possible, wave B, I think, within wave C down, and I think now I'm looking at a larger B wave here. So we've got an wave A up into the 2018 high, 3 waves down in wave B into the 2020 low, and then 5 waves up in wave C, up in the to complete wave B this year, so probably pretty soon. So you can see here we're tracking 1, 2, 3, 4, and 5. The main reason I had still thought of this as an ABC up was we did have a nice 5-wave decline last month, and we have off that 5-wave decline a very corrective rally so far. So it's yet to be decided how this is going to pan out into wave 5 as we see here. But let's go down into the hourly chart here, and we'll see, or the 4-hour chart maybe first. You can see here that the initial decline there off the March high was a pretty reasonable 5-wave decline. I can still best count that as 5-wave decline, but you can also say that it's a possibility of a large flat correction. So it could be wave A down, B up, and then 1, 2, 3, 4, 5 in wave C. I think right now that we've got a triangle here. It's a very tight triangle in wave 4, and then we're probably moving higher in wave 5 right now. This could also be an ending diagonal, or let's say an ending wedge of some sort. So, in that a trumpet pattern type of thing. So in that case, we kind of we bump up towards that upper trend line there again, and then we head lower. At the moment, we have the minimum expected target for wave 5 as a break of wave 3 in place. So let's see whether this third wave up continues next week. On the hourly chart, the action is, in general, you can see that the action is very subdued for a third of a fifth wave. It's pretty jumbled. So, the ending diagonal or the ending wedge pattern there, that trumpet pattern that I mentioned, that's a very real possibility given this sort of action. It's basically gone sideways with a little upside bias right now over the last month and a half. So let's see next week. Do we get an acceleration up into a third of a fifth wave? Possibly, but I can't, given the kind of choppy overlapping nature of this rally, I'm not overjoyed in this view either, let's say. Okay, let's move on. I'm going to go to the S&P next. We have 4 account here in the S&P. The S&P is closer to creating a new all-time high again, even though we have a nice pattern here. We have a nice impulsive pattern here to this very slight lower high. A market has to top somewhere. That's basically a top comes when the top comes, but it has to top somewhere. And the best way that I can surmise right now is we've got a bearish divergence for the last 2 months in place off around this high here. We have an impulsive pattern off this, the latest all-time high back in the 10th of May. We have 5 waves down, 3 waves up. So my best guess is that we are still topping in the second wave, and we should head lower into a third wave. I'll show you that here on the hourly chart. Things are quite close. The market is very close to breaking to a new all-time high again. 42.44 is the level to watch. I think on Monday, if we hold below 42.33, or even today, if we hold below 42.33 today, we sell off again, we start breaking down again, then I am on board with a 1-2 down into a first of a third wave down again. So let's see how that goes. We'll know more today. I mean, tonight, when I do the update tonight, we'll know more. So you guys on the website will know more. Okay, so silver actually came down pretty reasonably this week. Still working again on the idea that we have a 1-2 and a possible 1-2 pattern again. And even if you go on to, well, in general, I'm looking for a C-wave decline. It's much like gold, same more or less pattern as gold. We're still holding off a B-wave high. So we have a significant lower high in place on the 4-hour chart there, and we're after a pretty significant rally. So it's time, I think, to at least see some selling in silver. We've got the possibility of a 5-wave or a 5-3 pattern again off that B wave high. We've got 5 waves down, 3 waves up, a lower high, and maybe even we're moving into a 1 2 1 2 pattern into wave 3. I will suggest that the rally we saw this morning is within a trend channel. We seem to be topping out right now. We have overlapping bars here. We're getting a little bit of red, so we'll see how that goes. The critical point for the moment is this wave 2 high here. We've got 28.22. So if we see 28.22 hold, we have a 3-wave corrective rally within a trend channel, and we see ourselves spilling down into a 3rd wave again next week, then we are on for wave 3 down. So that's silver. Bitcoin, very real possibility that we have a triangle complete here in Bitcoin. I don't mention Bitcoin much, but I update the charts every night. So, you know, for those who want Bitcoin charts, they're on the website every night. I've been tracking this triangle here for the last couple of weeks, and it has come in quite well. You can see on the short-term chart here, it's a 4th wave triangle. We should head down into a 5th wave. I was looking for a lower high there last night, or the last couple of days actually. I was looking for a lower high. And I remember emailing one of you guys, and we were looking at that 4,700 high. And if that held and we broke lower again, that would indicate that wave 5 is underway. I think, you know, in wave 5 we could probably push down towards 25. And if that's the case, then, you know, who knows? If we start breaking that significant left shoulder here way back in January, you know, there's no reason why the selling can't continue. Okay, well, let's get into the hourly chart here. You can see we've got a possibility of a triangle ongoing. So we have an A, B, C, D, and E, 4th wave triangle. The wave 1 low here comes in at 47. So if we break 47, then that will rule out this triangle, and we may even move higher again. But for the moment, the decline today looks reasonably impulsive. It could be the beginning of a 5th wave down. And I think on that note, that was a brisk enough video. Well, thank you all for hanging around. Thank you guys on the website. You know, God bless you all. I hope you have a great weekend, a blessed weekend, and I will see you all on the website tonight for tonight's update, and then on Monday again, website members and everybody else. Sayonara, and I'll call it a night, and we will see you next week, I suppose, if I'm not gone by then. All right, have a good one. God bless. Read the chart there, or read the read that closing ABCs of salvation. Get on it, and you know, I'll meet you all in heaven. God bless. Bye bye. Okay.